Hello, good day. So our topic for today is break-even analysis, but this one is a multiple product. This is a continuation of our previous topic, which is break-even analysis. Okay. Now we also have composite BEP, and normally composite BEP, this one required for our multiple sales product. So this applied to our multiple sales product and is determined by dividing the total fixed cost by the combined contribution margin of the different products. Okay, so let's try the example. So now the entity decided to sell 3 different products, 5 units of C for every unit of A and 2 units of B for every unit of A. So hence the sales mix is 1, 2, and 5. The company incurred 120,000 total. Okay. So this one, we have composite A, B, and C. Take note that we say A is twice as B and 5 times as C. So that's A is 1, C is 5, and then B is 2. So this is now their composite ratio. So we have now to compute, we know that the fixed cost is 120 and we wanted to compute for our break even, so zero profit. So 120, therefore contribution margin and fixed cost should equal. Same would be 120. Now we need to get the composite contribution margin, which is 18.75. How do we get this? We get this by multiplying the contribution margin of each product by its ratio. So that's 1 times 40 because we get contribution margin by deducting selling price less variable cost. So for A, it's 40, for B, it's 30, and for C, it's 10. We just deduct selling price less variable cost. And then we multiply it by the ratio. So 1 times 40, so that's 40. B, 2 times 30, that's 60. And then C, 5 times 10, that's 50. So therefore, our total contribution margin per ratio would now be 150 divided by the ratio, which when we add the ratio, it's 8. So 150 divided 8 will give us 18.75. 18.75, we have to divide 120,000 divided 18.75. We will now get our units, break even in units, which is 6,400. So 6,400, we divide it by 8 so that we would determine how much each unit to be sold for each product. So for A, it's divided 8 times 1, that's 800. For B, it's divided 8 times 2, that's 16. And for C, that's 4,000. It's divided 8 by times 5. Okay? So, what do we do now? We just multiply it by its selling price and then variable cost. So, when we total it for the selling price, we will be able to get 472,000. For variable cost, when we total it, that would be 352,000. And when we deduct it, that is 120,000. So, therefore, our break-even in unit is 6,400. And then, if we would per product, the break-even for A is 800, for B, 1,600, and for C, 4,000. Okay? So, let's try another example. Different case. So, suppose the product A, B, and C with a variable cost of 80%, 75%, and 90% respectively, whereas 50% of the total sale is A, while B is 50% more than C. The company incurred 34,125 in total fixed cost. So let's see. So this time, we said that the ratio would now be A composed of half of the sales. So we know it. That would now be, if it's half of the sale, so we check. And then B is 50% more than C. So therefore, C is 1 times 2, which is more than 50%, 2 for B. And we say that A composed of 50%. So that's 3. Okay? So we were given now not the amount. Instead, we were given the ratio. It said that the variable cost for A is 80%. Therefore, the contribution margin is 20. For B, it said 75. So the contribution margin is 25. For C, it's 90. So contribution margin is 10. Okay? So we would now compute for our composite ratio. Same thing as what we did before. So we just multiply 3 times 20%, 2 times 25%, And then 1 times 10% divided by 6. We'll be able to get 0.22%. So we divide this, in this one is percentage. What we will be able to get is not the number of unit, instead the total sales price. Okay? So that would now be 34,125. Okay? Divided 22 will give us the total selling price of 157,500. Okay? Next, we would also have how much for A. The total selling would now be 78,750. For B, it's 52,500. And for C, it's 26,250. Okay? So the fixed cost, we just had to multiply it by the contribution margin. Since this is a break even, therefore profit, therefore contribution margin and fixed cost should always be equal for our break even. Okay? So if you have questions, just comment below and I'll get back to you as well. So if you like this video, please help me reach out more people by hitting the subscribe and the like button below. God bless you and keep safe. Bye!